will be recording session. So yes, good evening, everyone. Thank you for joining us tonight. We are going to go through understanding money market funds, but yes, a few introductions. My name is Gertrude Njeri. Most likely, you know me. You have interacted with me in one platform or the other. So yes, I am the founder of Financial Buddy, whereby we strive to educate our audience about financial literacy. Tonight's topic, we are going to go through money market funds, as I have stated, and our speaker of the day is a private wealth consultant. I will let him introduce himself. So yes, let's get started. Mr. Simiu, kindly introduce yourself and we can get started.
Thank you, Gertrude. It's wonderful to be here. I'm Orchestra Wycliffe. Thank you.
Okay. To our guests today, maybe we can start with an icebreaker. You can share with us where you are joining us from. Personally, I am joining from Kiambu. Mr. Simiyu, where are you joining us from?
Well, I'm joining the webinar all the way from Ongata Rongai.
Welcome. Everyone else can just state in the chat section, whereby if you can hear us, kindly say yes and tell us where are you joining us from before we start. And I hope you have your notebook ready to take down some notes. Yes. I can see a few people are still in the waiting room. Maybe we can admit them. Okay. As we go on, maybe we can get started. Lavender. Hi, Lavender. She says she is joining us from Homa Bay. Karibu sana, Lavender. I hope I'm saying it correct. Yes. As we wait for the others, I think we can get started. What do you think, Mr. Simil?
Yeah, sure. Because for the interest of time, okay. It's good that we start.
Okay.
If you allow me.
It's okay. Take it away.
Thank you, everyone, and welcome to this session. As you heard from Gertrude, the name is Orchestra Wycliffe Simiyu. I'm a private wealth advisor with Nabo Capital. Nabo Capital is a fund manager. And what a fund manager does is just basically investing on behalf of clients. In this case, you as a client. On my day-to-day job, what I do is help individuals, families, institutions create and grow their wealth. And in that, in helping people create and grow wealth, personally, I have an approach which is based on what the organization has tailor-made for us to follow as a blueprint in helping our clients. And the philosophy is based on Maslow's hierarchy of needs, which inspired some of the portfolios that we use to guide our clients into building portfolios in the process of creating wealth. So basically, that's me. And some of the things that we use to do this, one of them is exactly what we are going to talk about today. I think that's enough for an introduction from me. Well, today, I hope, Gertrude, you're giving me the permission to proceed.
Yes, you can. Yes, you can. Kindly proceed.
Perfect. Just allow me to change something. You can see my screen is blocking me from doing. Okay, today, some of the key things that I would like us to look at are on your screen. I hope everyone can see my screen.
Yes, yes, we can.
So, talking about money market fund, we will need to understand some of these things that are displayed on your screens. We will need to understand what a financial market is. We need to understand what a money market fund. We need to understand what money market is. Now I can't access my screen, so just allow me to look at my notes. Something is blocking me from accessing what I want, what I've displayed. So we'll need to understand what a mutual fund is, and a collective investment scheme. So those are key things that we need to look at before we start talking about money market. Great. So we'll start with a financial market. I'm not going to go deep into what a financial market is, but I'll just give a brief description as displayed. Financial market is a platform, or you can call it a system if you want, where buyers and sellers, just like any other market, come together to trade financial assets, such as stocks, bonds, currencies, derivatives, and commodities. I know you've interacted with some of these things, and that is probably why most of you, or a good number of you, are interested in such a topic. So with the financial market being just like any other market, we are going to narrow down to a certain part of this financial market, which we call money market. So again, I've given a brief description on your screens. You can also go through it, because I'll just sum up what we have here, what I can access. So money market is a segment of a financial market. Now, it's a market that allows individuals, like I've mentioned while describing a financial market, that allows the trading of short-term securities, which normally it's not more than 1 year. So there is also a purpose for this market. Money market will serve the purpose of facilitating the liquidity and stability of the financial system by providing a platform for short-term financing and investments. And there are specific instruments that are traded in the money market. Remember, we've come all the way from a financial market, which is a large market. It's the whole system. Then we've narrowed down to money market. And in money market, there are specific instruments that are traded there. I'm pretty sure most of you have interacted with treasury bills, which most people call T-bills. We also have interacted with the commercial papers, certificate of deposits, repurchase agreements, stuff like that. Those are some of the instruments that are traded in the money market. So with now that we've gone into money market, some of these instruments traded in the money market, one of them combining all the a number of instruments that are mentioned, one of them is a money market. So what's a money market? A money market is a unit trust. And basically what it means is just a collection of funds from individual investors pulling their savings together so that someone else, in this case, who is normally a fund manager, who will help them to invest and find the best opportunities in the market. And we may also want to look at a unit trust. And now that money market is a unit trust, it is also said that unit trusts are classified under collective investment scheme. So what is a collective investment scheme? It's just money market, the way it is, but we'll describe it down here. A collective investment scheme is an investment fund where multiple investors pool their money together to invest in a diversified portfolio of financial assets. Basically, what it means is in a case of money market, this is a fund that has not only invested in T-bills, but it has diversified depending with the specific objective that this fund has that must achieve for it to give a return. Most of the objectives are like looking at a return that clients have been promised. So you make sure this fund achieves this particular objective. And some of these collective investment schemes, we've also interacted with them, I believe. Some of them are the ETFs, the mutual funds, and now the unit trust that we've spoken about, now narrowing down to money market. So this is just a chart to sum up what we've gone through. A pool of funds, collective investment scheme, good examples. Most of you have interacted with money market. There's also something called a fixed income fund. We also have equity fund. We have a balance fund. Most people call fixed income fund sometimes bond fund. So this is just a summary to take us through what a unit trust is. Just in case you have a question, you can raise your hand and I should be in a better position to maybe not go very fast if I'm too fast. These are features of money market fund. Having defined what money market fund is, those are some of the features. We've talked about it being a unit trust fund. There's that aspect of pooling funds together. There's the diversification. It also allows you as an investor not to just place your money in. For instance, let's talk about the bond fund. It allows you to diversify. Instead of investing just in bonds, it also gives you an opportunity to invest some of what you have into something else, which normally it's very hard for you as an individual to do. If you get into this kind of investment, maybe you want to diversify your portfolio, you'll find you'll need a lot of cash for you to diversify so that you get exactly what should benefit you in the long run. So it also, one of the features also, you're also getting access to, if you decide today you're going to get into investment through money market, then you're going to access the professional management from through a fund manager. And the professionalism here is in the case of, most people call them financial advisors. For us, where I work, we call ourselves private wealth advisors. So these are professionals who are mandated to help you through your investment journey, and a fund manager. And one thing you also need to know is when you get into money market, you will be investing in units. Money market is divided into units. So when you're getting into money market, just know that you're going to buy something like shares. So today, whatever amount you're going to spend as your initial investment or top-ups or lump sum in a specific portfolio, then all this money is going to be divided into shares, units within that fund. So money market is really very liquid. By that, it means you can access this money anytime. Just the same way you run your bank account. It's the same way money market operates. So it gives you the liquidity. Maybe in case of emergencies, it doesn't lock your money. So you can access this money regularly whenever you need them. So there's also regulation. So this is very good for you as an investor. It cushions you, because when there is some policies within that market, it means there are some things that cannot be tolerated in terms of risking your investment. So that is where now you also need to bank on the advantage of this kind of fund being regulated. It also depends with where you're operating from. So if you're within Kenya, there are some laws that govern this kind of fund. And a very important bit is the compounding aspect of this fund. So if you invest in money market today, I don't want to go deep into compounding. That is a topic for another day. If you invest in money market today, you'll be earning interest on a daily basis and compounding. Like from where I work, my employer, our principal is at the end of every month, we reinvest what you've earned in the course of a specific month, if you allow us. But if you decide you want to redeem your returns, then that is okay. But normally, building portfolio and in the journey of wealth creation, we always encourage our clients to make sure they reinvest, because by you joining a fund manager like the one I work for, it will mean that you are joining a team that has embraced the aspect of purpose in each and every investment. So another aspect is, okay, I've mentioned the interest is earned daily. Also, if you compare the returns that money market gives you vis-a-vis what the bank deposit gives you, then you will find out that money market has higher returns than just what you get with the banks. This is one of the lowest risk, one of the investment with the lowest risk in the market, anytime, anywhere. So this is what you can consider whenever you have some money and you feel like you want to place it somewhere safer without worrying. What if you lose what you've earned? You've sweated so much to earn. So this is a good investment because of its low risk nature. And you can also access this money, like I mentioned before, easily, anytime. Most cases it's between 24 to 48 hours. Yeah, in a case that I know, you have to write a mail in a case where you are using a financial advisor to help you build a portfolio with an intention of working towards a specific goal. So you have to make a request 2 days prior to the day that you need the money. So the money will be wired to your bank account. The standard time is normally 3 working days, but most fund managers try their best to avail the funds, because it's just a communication between you, the bank, and your fund manager. So that is it about advantages and features of money market. So money markets, in the market we operate in, especially our Kenyan market, a money market can be accessed in two denominations. One is the USD, which is what has brought us here today. We are here because we wanted to talk about the USD money market investment. We also have the Kenyan shillings on the other side. The difference is, you will find that if you check the rates in the market, you will realize there's a very big margin between the difference in the rates of USD investment and Kenya shilling investment. Simply because the USD is assumed to be stable and the Kenyan shilling is not very stable, so the rate cushions it against the inflation. And most fund managers will always give you a return that outperforms inflation. So the difference will be by how much. And another thing I would like to talk about is why should one invest in a USD money market? Number one, currently the shilling has been weakening against the dollar. The dollar has kept on gaining every now and then. One of the reasons why we encourage clients, or I encourage clients to invest in USD money market, is because of the aspect of FX gain, the foreign exchange gain. You will find that if you, regardless of what a fund manager or a fund manager will give you in terms of returns on this kind of investment, you will find that if you hold your money in dollars, but in an investment account, in the long run, after a certain period of time, or maybe let's say we project at a period where we are projecting maybe the shilling will stabilize against the dollar, which will only take a few moments, then the dollar will start shooting again. That's my speculation. So if you hold your investment in dollars today to a period of, for instance, 1 year, then you will end up making more than 20% if we do the calculation. And this one is brought about by the FX gain. So you'll be gaining in terms of the foreign exchange gain, because you've gained for all this period. And also you'll also have some money in terms of returns from what you've been given with your fund manager. So that is why we encourage most of our clients now that the shilling, but it doesn't mean that the shilling investment is not very good, but for you to maximize on the gains, then the dollar is far much better at the moment. And we also encourage clients to maintain dollar investment if you have access to dollar. But if you don't have access to dollar, you don't have to sweat to go and get dollar, because it will force you to hold your investment for a longer period for you to realize a return that will have covered what you lost during the exchange from Kenyan shillings to dollar. Perfect. Most of you will ask me, if we go into this kind of investment, how safe is our investment? This is just a management structure of a specific fund in as a unit trust. And in this case, we'll talk about money market. If you decide today you are getting into investment in a money market, there are key players in the market or in the system in terms of management that has been set up in the within the structure of managing this particular fund. At the apex of this, all this, sorry, at the apex of all this is the Capital Markets Authority. The work of the Capital Markets Authority as a regulator is to be the overall overseer. And they are more like the ones who are in charge of everything. So every report has to go through them. Every performance, every malpractices must be reported to them. Then we also have a fund manager. A fund manager, like we've mentioned, fund manager as a unit has its own departments. But let me just talk about the fund manager. So the work of the fund manager is just to take instruction from you as an investor and pass it over to the person who is holding this money, to give your instructions to them so that this money is invested according to what you've instructed. So the fund manager is there to advise you and also to give your instructions into that will affect your investment. So, and in this case, a fund manager will always come on board with a team. Among the team members is either an investment advisor, a wealth advisor, or a financial advisor, and also their departments there, according to just the same way any organization would be set up. And another player is the custodian. The custodian in this case, you can see from what I've shared, I've also mentioned a number of them. So the custodian in this case is normally a bank. The work of a custodian is just to receive the money. When you send this money, it does not go to your fund manager account, but there is a specific collection account for this particular fund that receives that this money are collected in. Then when upon your instruction, the fund will now be invested. But this money is not handled by a fund manager. The work of a fund manager is just to give instructions from you as a client. Then another player would be a trustee. The work of a trustee is to oversee and make sure all the policies within all the policies that are set in place are followed to the letter. And in case of maybe embezzlement or misappropriation of your funds, they will always report to the Capital Markets Authority, who have the right to take your money from the fund manager to give it to another fund manager, because there are so many fund managers out there. So if they feel the way you're handling an investor's money is not in line with what has been stipulated out there, then they will take it from you and give it to someone else to manage it. Then what is also important to mention is that most of these fund managers are also audited, and of course auditing, we all know what how important an audit is. And with all that, I'll sum up the structure of management of this particular fund. And this one cuts across not only to a specific firm or fund manager, so it cuts across so many other fund managers, and that is a blueprint. So what do we need what should we consider before we get into any investment? I'll just mention them again. Of course, you have to look at, let me put risk tolerance as one thing. So you must always call yourself to a meeting and get to understand exactly what your risk tolerance is. And you get yourself before you get into an investment. You also need to know the objective, both your investment objective and also the fund that you're getting into, the objective of that particular fund. Of importance is also the yield and the returns, whatever you're getting into, how much is it giving you? That is very key. Expense ratios of a particular fund is also very key, that you look at them. So I will also advise that it's very important to always consult a financial advisor to take you through all this. These are things that we are just mentioning for the purposes of giving you the information. But when you sit down with a financial advisor, you'll get deeper into these issues. So the liquidity of that fund, is it something that is going to lock your money? Or how often can you access these funds in this particular investment fund or this particular investment vehicle? Credit quality, diversification, this is very key. Make sure if you're getting into different fund managers have the same money market, but the diversification is very different. So you need to really focus here a lot, get to understand this particular fund, how diverse is it, and what are the specific underlying assets within this particular fund. And the interest rate environment, this is in the case of a bond fund, like the fixed income fund, you also need to consider that. The regulatory environment, if you're operating in Kenya, you want to invest in Kenya, what are the regulations that may affect you or that protect you against you losing your money, and the tax implications. So if you consider all that, you should be ready. And the first thing, the disclaimer is always look for a financial advisor to guide you properly. So up to that point, do you have any question? Or someone has raised his hand and I didn't see?
Yes, we have one question.
Okay.
What is the cost of using a financial advisor, and where can I get one? What is the cost of using a financial advisor, and where can I get one?
Thank you. Do you allow me to attend to that first?
Yes, you can.
Well, it's not cheap. It's not also very expensive, but we can take advantage of going into this kind of investment via a fund manager. If you get into this investment through a fund manager, then it will mean this particular firm has advisors. So advisors will always come as staff. some of them. There are also those who are not staff. But now for the best and the easiest way to get one is through a fund manager. When you ring any fund manager, they will assign someone to attend to you and should be able to walk you through your investment journey. And please kindly then go through a fund. Then if you prefer, which I'll always advise any client to access a financial advisor through a fund manager. Now, there's something I missed out on is there's the various fees associated with this kind of investment. Look for a fund manager, then make sure you get to understand just the things that I've listed. I think just 1 minute. So like going back to the previous slide, from what to consider before investing in a money market fund. All these things, consider all these things, then do your research very well. Look at the fees behind, the fees that all the costs that are involved in that fund, so that you get to understand exactly what you're getting yourself into. But I would say is the basic ones is normally the management fee and also the withholding tax. That is the most common. So it will always vary. The cost will always vary from fund manager to another fund manager. But the most important fees would be the management fee and the withholding tax. Normally, the fund managers are allowed to charge you up to 2.25% on your return as management fee. So you'll find some of them doing 1.5. Where I work, we are doing 1.5 actually. Some of them will do 2, some of them will do 1.8. So it depends with the fund manager. So basically, those main fees that are associated with this kind of investment.
Mr. Simu, a quick question. Sure. You've said that Nabo charges 1.5. Is it on the Kenyan shillings money market fund and the USD, or yeah?
Thank you for that. It's also good to specify that. So if you get into our investment, our management fee is uniform. So if we are charging you 1.5, it should be on your return. We don't charge it on what you invested or what you invested yesterday and reinvested today, because I mentioned that with this kind of investment, you are earning returns every day, and it's our duty to make sure we preserve your capital. And because of the nature of this kind of fund, your capital is always almost promised to be preserved. Let me use such word so that you don't tie me to what I'll say. So
almost promised, okay.
So because it's an investment, each and every investment has some aspect of risk. I don't want to say this one doesn't have risk, but it's considered the lowest risk investment. So it's good for any other person who wants to grow their capital, who wants to work on to accumulate for the purposes of building a passive income, maybe working on an emergency fund or working on some plan, education plan, stuff like that. You want to buy an asset, you want to go for a vacation after some time, you're building something into the future, you want to do a charity in future. Instead of using your money, you just place your money to work for you so that it gives you some money to carry out what you intend to do in future. Thank you.
Okay. Thank you.
Okay, so if we don't have any other question, I'll take you through customer journey. Normally, we do brand awareness. I'll always come with a proposal to you. We sit down if we agree on it, and the proposal we take with the proposal. This is just a guideline into what we do as where I work. So we will come with a proposal which is telling you what we have, looking at what you have. I do the proposal for you. I do a plan. Then once you've agreed to our offerings, we'll always need to fill an application form. Once you fill an application form, you will fund an account will be opened. Of course, there's that exchange of communication. Then you'll fund your account. Once you funded your account, you start earning, and the earning is on a daily basis. In our case, you earn your interest on a daily basis, compounding. Then at the end of the month, we reinvest. Then at the end of every month, latest 5th, you should always receive a statement to just approve or just a report on the performance of your investment at the end of every month. So what do you need to start investing in this kind of fund? Just like we mentioned, we said money market is the easiest investment account one can open. So just the same way you open a bank account, you'll need a copy of your ID or passport. If it's a minor, you'll need a copy of a birth certificate. By the way, you can also invest for a minor, just under your name temporarily, but we'll need a birth certificate to prove that this investment is particularly for this minor. Then you'll also need a KRA for Kenyans. But if you're a foreigner, then you'll need a certificate from your country of origin, or let me say domicile country. And of course, we'll need bank details so that when you're asking for redemption should always hit your bank account, and it's good that you specify a bank account that will be receiving this money. Those are my details. Thank you very much. So in case you wish to maybe further this discussion on a personal level, those are my details. You can reach out to me, my email, my phone number. Then I'll be able to guide you on how to go about this and also give you a deeper detailed information on this. For the purposes of presentation, we had to do it very simple. Thank you, and thank you all for coming.
Thank you as well, Mr. Simiyu. As we were signing up, we shared a few questions. Allow me to read them out. The first question is, take us on today's money market fund rates. Take us through today's money market fund rates.
Okay, I won't give today's because today is
Saturday.
It's a weekend. We normally don't work on weekends, but I can give you yesterday's.
Okay.
Can I access it? Yesterday's rate kindly? Just a moment.
It's okay.
Good.
It's okay. In the meantime, you can share any questions that you have, any question that you would like Mr. Simiyu to answer in the course of this presentation before we end the session. Any question that you have? Yes.
So as we wait for the question, maybe let me just take you through our money market for rate for yesterday. Of course, this today business is going on, but because we don't work on weekends, other than just appointments and maybe virtual meetings, just private sessions. So yesterday's money market Kenya shillings was at 16.18, and 16.18 is after it's net of management fee. And with the net of management fee, what I mean is we've already deducted management fee. So if you're getting 16.18, it's you and your government. Wow. You and withholding tax. But what will hit your account, we will make sure we calculate the tax for you because we will submit it for you. So what will hit your account is your net after all the fees. which if we engage on a one-on-one session, I'll be able to take you through that so that you at least you get to understand how we do it. And I'll also pick on money market USD. Money market USD as at yesterday was 4.86. You can see the difference, 16 and 4.86. It's just because the dollar is stable and it's assumed the shilling is unstable, so it has to be cushioned against inflation. That's why we have the big difference in the rates. I hope that answers the question.
Yes, it does. The second question is, do I need a dollar account? Are the benefits way more than the Kenyan MMF? Do I need a dollar account? And are the benefits way more than the Kenyan money market fund?
Like we said, let me clarify something first before I get into why if USD investment is better than Kenya shillings investment at the bank details. So if you are going into investment as you're going to do money market USD dollar, then you will need a dollar account to be receiving these funds whenever you do redemption into your, how do you call it, bank dollar account or dollar bank account, your personal dollar bank account or whichever account dollar or bank. So so it's also important. However, you can also negotiate this with your fund manager to either before you can run your account with the Kenyan shillings account, but when it gets to a point where you've asked for redemption, so your money will not hit your Kenyan shillings account as dollar, but you'll negotiate with your fund manager to exchange it for you. So you'll just exchange it, then you'll receive it in terms of Kenyan shillings account. I would still repeat this. It is wise. If you're in employment or you're in business and you're making your income in terms of dollar, then as at now, maintain your investment in dollar. Just hold those dollar for some time, for a longer time. Because the advantage is dollar will never drop against Kenyan shilling. So regardless of the time that you're holding this investment, you'll still make it. And in the end, you'll make more. And more, we mean 20+% in terms of return. So that is a plus for you. But you don't have to break the bank to get the dollar. If you don't have dollar, then do it in Kenyan shillings. It's still better because the rates are higher and you're cushioned against all this that is happening.
Okay.
But it's wise. If you can directly access dollars, good. But don't, it's tedious to run around trying to exchange all your Kenyan shillings into dollar. You still make some money, but you'll need time. You'll need time to be patient a little more than other people so that you'll realize something better.
Okay. That is well explained. The next question is, how can I use my USD both short-term and long-term overseas? How can I invest my USD both short-term and long-term overseas? I believe this is someone who is abroad and they want ideas on how they can invest in USD.
Repeat the question, kindly. I missed you somewhere.
Okay. How can I invest my USD both short-term and long-term overseas? How can I invest my USD both short-term and long-term overseas? I believe this. Yeah. Okay. Go ahead.
So let me just answer it the way I've understood this. And I'll also try to be liberal enough so that you understand why I'm giving this kind of answer. Most of our investments right now, I don't know about other firms, But of course, we can, if you're interested in getting your money, invest it outside Africa in this case, because in the spirit of diversification in the funds that we run at our company, we've invested not only in Kenya, but also in Africa. Of course, not in Ghana and South Africa. We've only focused on emerging markets because the opportunities there are better. If you want to understand more about that, maybe we'll engage on a one-on-one basis with any other person, participant today who is interested in getting that. But coming back to the question, I hope to some extent I've also answered this question, but my own way. Correct me if I got it wrong. If you are abroad, let me call it that way, and I don't know if this person is abroad and intends to be investing back here, or they want their money to come from here to go to overseas. But the first part I've answered, a case where you want to take your money out. So we don't do it. Personally, I've never dealt with someone who wants to do offshore. But of course, I've had inquiries on the same, and I know people who do it. So my part is just to link you up with the people I know are doing investment outside. However, if you are outside Africa or outside Kenya, it's very possible for you to do an investment within. And in this case, through us, I don't know about other fund managers, but through us, it's very possible. You can still do your dollar, you send it. We have clients outside Kenya, outside Africa, who are sending money from abroad and investing it back here. You just build portfolio with an intention, with a purpose that you've agreed on with your financial advisor or wealth advisor in this case. I'm sorry if I've not answered it the right way.
It's okay. I think that's good enough. The next question is the best money market funds to invest in and goal setting for funds. Goal setting for funds.
Is that a question, or I was just supposed to comment on that?
It's a question.
It's a question.
Okay, they've phrased it in a statement way, but it is a question.
So the best money market in terms of rate, apparently, let me speak for my employer. Apparently, Nabo Capital is among the best money market. I would say not dollar, but the Kenyan shillings money market. We are the best right now. And if we were to talk about rates, then I would say we're still the best. However, what is very important, very key is the purpose. And the purpose, the goal setting is something that you will agree on, or you will work on with your personal finance advisor. So if you decide to reach out to a financial advisor, or in our case, a wealth advisor, then the goal, whatever goal you have, it is this a professional who will help you now fine-tune it to something that is achievable, and something that something that is also workable in terms of finances, time, and every other resources that are involved.
Okay, you've heard that we need to work with a financial advisor. The next question is a USD money market fund the best way to earn profits long term?
Yes, from the description of, from the definition of our money market, I think there's a part we were talking about describing what money market is. We mentioned it as a unit trust, and we said unit trusts are also good if you want to build, you want to accumulate wealth in the long term. So its nature makes it a very, 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 very crucial investment vehicle for you to build wealth with. So it's good. That is my take, because money markets, unlike the banks, this kind of investment, unlike the banks, will help you grow your money steadily. You are not risking too much, but you are growing at a very reasonable rate, which is very good in the long run. We've had people building portfolios with us for over 10 years. But it's just what you were working on with your financial advisor. And also, this wealth creation journey is always a journey of financial discipline and commitment. So if you don't commit to a certain consistency, then there's nothing you're doing. But if this investing in a fund is only good if you want to work on a specific goal and you're willing and committed to walk this journey.
Okay. The next question is, what is the lowest amount I can start with? What is the lowest amount that I can start with?
Thank you. It's different from, I'll also say it's different from fund manager to fund manager. It also depends with a specific objective of what a firm is trying to achieve, or the impact they are trying to gain on the grounds they're trying to gain in terms of their philosophy, their policies. But again, with us at Nabo, our minimum is 100. There are others who are doing less, but we always believe that if you come to me with 100,000, then we plan for it. It can make sense in the long run. And like someone building 100 bob every day, we also have partners who are collecting funds on behalf of investors who cannot meet the minimum threshold that we've put out there. Then they collect it, then come and invest on behalf of these clients who are unable to meet the threshold. However, me as a wealth advisor, if you approach me, then you tell me you have a lesser amount than that, then you just give me a plan that you'd wish to work on, then I give you my input, we make it workable, then I'll be able to allow something lesser than that. It's always something that can be worked out with your financial advisor. Yeah. But the book minimum is 100 for us. Then there is always the top up if you're building a portfolio. Then if you want to accumulate this for a longer period, then there is also always that top up, maybe routinely, could be monthly, quarterly, biannually, annually, but it's something that you've committed to. It's not always mandatory to do top ups, but it's good to do top ups if you want to achieve something. Like I told you, our firm is a goal-based investment firm. So definitely we value purpose in every investment. And for that reason, we'll always encourage our clients to start wherever they are, then build it bit by bit in terms of topping it up. Then we continue and build something big in the future.
Okay, and what is the minimum that I can top up?
Our minimum is 10,000, but still, if you're working with a financial advisor who understands your goal, it will always be compromised based on what they are willing to take in terms of management. You see, if I'm managing you, I have to accept you the way you are. And if I take you as my baggage, it's up to me. So it will always be a discussion with your wealth advisor. But book minimum is 10.
Oh, okay. Okay. The next question is, for USD money market fund, must I have a dollar account? I believe you have answered that, but maybe you can answer it just one more time.
Okay, it's good to have a dollar account because you're maintaining your investment in dollar, so that upon a request for redemption, you'll be receiving your money in dollar. Then you do the conversion by yourself. But again, if you feel like you don't have the muscles to run around trying to look for better rates in the market, then you can maintain your Kenya shillings account, but give us a instruction. Like I told you, the work of a fund manager is to get instruction from my investors. So give your fund manager instruction to convert it for you, then wire it into your Kenya shillings account. Yeah, so it's not a must that you have a dollar account, but it's always good if you want to access your money in dollars.
Okay. It is not a must, but it is wise. Okay.
Yes. Yeah.
Okay, the next question is, I just want to know about the US regulations and how their market is and the advantages. I believe, yeah, just answer it.
I know you wanted to say I talked about that. I cannot speak for about a different country that I'm operating within Kenya. Currently, I'm within Kenya. So unless you're interested in investing in the US, then I'll link you up with someone who is working there. But for now, I know better about Kenyan market and the regulations within.
Okay, when we were starting the session, we said that money market funds, you as the fund, the institution, you take our money, then you invest in various assets. What assets for Nabo are backed by the USD money market fund? Yeah.
Oh, perfect. Would you allow me to, now you're taking me to talk about, just allow me to share our fact sheet so that we can talk about it as well displayed here. Is that okay?
It's okay.
I want to take you through something that I feel you will want to know. Just 1 minute. Let me look for a random fact sheet.
Okay.
I'll not go to the latest, but I'll just get a random fact sheet for the purposes of demonstration.
Okay. In the meantime, if you have any burning question, a compliment for our speaker of the day, this is their time. You can type it out in the chat section as we get ready to wind up. And maybe you can even say what ideas you have for future webinars. And yes.
I hope this is okay. Can you see my screen? Huh?
Yes, we can.
Okay. Sorry, you will have to. Okay. Now, this is oh, sorry. I've shared the wrong one. Sorry. Let me get the correct one. I'm going to confuse you further with that. But let me get a random one. Nabo money market USD. Good. There we are. Just a moment, and I should be out. So, as you can see, just a description of what it is. When I talked about the objective of the fund, you see, like this is what the objective for this particular fund at our farm is, and this is a fact sheet for April. Of course, we have for December, January is yet to come out, but we have up to December. So I'll just take you through this for the purposes of study. So the specific objective of this fund is to maximize current income by investing primarily in a diversified portfolio of short-term debt securities, with aiming to preserve capital and maintain a high degree of liquidity. So it only means that as much as we are going into investment, we try our best so that in case you need money at any particular point, you'll be able to access your money. So the graph there is just showing the performance for the month and up to that year. We will not go into that. On this other side, we have whatever it is. It's a unit trust, like I said. It's showing when we started this particular fund, the size of this fund, as in April. Now it's more. As in April, we had $1.28 million under our dollar investment in money market only. But of course, up to December, it has moved a lot. The benchmark is there, the manager, the team, the portfolio managers are also indicated there. Like I mentioned, the portfolio manager, the trustee, the auditor, the custodian. Then, of course, the requirements are also there. You need for dollar, actually, I didn't mention the minimum requirement for dollar. For dollar, you need $1,000 to start, then top-ups of $100 every monthly, quarterly, depending with what will work best for you. Disregard the figure that you're seeing there. That one has been updated since April to December, so we have a different figure. So minimum for dollar investment is $1,000 for a start, then top-ups are $100. And of course, the management fee, it's there. Then that is April. Now, what I wanted to show you is here. Good. As in April, this was portfolio distribution only shows what this particular fund has invested in. So you can see 33.6% of the $1.2 million is invested in mutual funds. We will talk about mutual funds another time, but what we need to know is just it's part of a collective investment scheme, like we agreed. Mutual funds is part of it just operates like what we are talking about, but it's a discussion for another day. And another bit is cash and cash equivalents. Cash and cash equivalents, this will be bank deposits and every other thing that can be converted easily into cash anytime. And also a portion of it, that is 27.1, is invested in Eurobonds. Up to now, this is still a composition of what most of our investment up to date is invested in. So there's a bit in Eurobond. Another part of it is in cash and cash equivalent, then also mutual funds. Yeah.
Okay. I believe we have understood that. The other questions are simply a repetition. Take us on the day's money market fund rates, which we have done. How does it work, which you have explained. What is the best way to grow your portfolio? What is the best way to grow your portfolio?
I like that question. I like the best way. Let me also try and read what has been written. Oh, you are reading from this, huh?
Yeah.
Okay, perfect. I'll avoid that. So the best way to grow your portfolio is starting small. If you have a lot of money, then start big. But if you don't have a lot of money, just start small and build bit by bit. Start with the 1,000 if you're doing dollars. Start with the 1,000. Keep doing $100 every month, quarterly, biannually. Just build that portfolio. Start it small, build with time. So look at what you're starting with, what you're doing as top up, then look at time, then commit yourself. That is the best way to build a portfolio. And the best way to grow, probably.
Okay. I believe that's
Lavender is racing.
Okay.
So I want, just on what you have said, Wycliffe, I want to ask, so can somebody be like, after every 2 months or 3 months, they deposit the $100? It's a must they do it monthly?
No, what I said was, it's good to start with an initial investment. It's good to do top-ups, but top-ups are not mandatory. Top-ups will only be informed by what you want to achieve. So if whatever you want to achieve, it's okay being built with that pace, then it's okay. But top-ups are not mandatory. You can do 1,000, then relax. But if you're working with me, I'll always encourage you to try and do top-ups because they are very good for you to when building a portfolio with an intention of achieving a specific goal. I hope that answers you, Lavender.
Yeah, that answers me. And also just to ask, so if I am to open a dollar account, I need to go through my bank?
No. What will happen is, okay, you opening your bank account, bank dollar account, you know, there is a investment account, then there is also the bank account. The work of the bank account here is just to receive your money whenever you ask for redemption, and maybe you also paid through account, then you also place a standing order for money to be wired from your account to the investment account. However, it's not a must that you have a dollar bank account for you to do this investment. But the challenge, if you don't have it, the challenge will be the time you need money and you need it in dollar. However, with us, it's very easy. If you start investing today and you're investing in dollar and you don't have a dollar account, it's okay. We will maintain whatever account you have, if it is a Kenya shillings account. But later, when you want to do a redemption, you will go through change of, we call it change of details. You'll have to sign another document to allow us to change from your Kenya shillings bank account to a dollar bank account. The details.
Oh, okay, understood.
Thank you.
So maybe you can leave for us your number so that it can be easier when one wants to go through Nabo.
Perfect. If you're writing, I displayed it, but if you're writing, I can give it to you. Is that okay?
Yeah, I'm writing.
So if you're writing, my number is 07 28
Yes.
710 495. I'll repeat. My number is 07 28 710 495. I think, Gertrude, you can write it.
Okay, thank you.
Comment section. Then the email is w.simiyu@nabocapital.com. w.simiyu@nabocapital.com.
Okay, thank you.
You're welcome. I appreciate it. Thank you for the boldness as well.
Okay, I believe we've come to the end of the session.